Hello, everyone. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started. Markets are mixed today, generally up. Nasdaq is up 0.4%. Russell 2000 is up 0.9%. S&P 500 and Dow Jones is relatively flat. NVIDIA is up 2%. As you can see, we're going to get to the heat map in a second, but oil is up above $70 per barrel. WTI is up about $70 per barrel, and the yield curve is up about 3 basis points today. 10-year Treasury yield is at 4.36. Earlier, we got economic data. Mortgage application index dropped 4%. ADP employment change for July was 104,000, slightly above expected 78,000. If you divide the two, prior month and actual, you get to about 50,000. 40,000 a month of jobs additions. GDP advance read was 3% above the expected 2.5%, but the domestic sales to domestic purchasers was lower for fourth quarter in a row. GDP deflator for Q2 was 2%, but core GDP deflator was about 2.5%. Pending home, we're going to talk about pending home sales in a little bit. And at 2 p.m., in about an hour, we have the FOMC rate decision, which is probably going to be unchanged, but the market will be looking for September plans, what Powell will do in September. Heat map, you can see NVIDIA is up 2%, Apple is down 0.6%, Tesla is down 1%, Google is up 0.8%. Financials are up, generally speaking. Consumer defensive stocks are down. Very quiet. Building products and equipment down substantially. At Train Technologies, driving it down 8%. Not sure what's going on there, but I'm going to take a look at that later on. Like I said, oil prices are up quite a bit in the last 5 days or so, now above $70 per barrel. Let's read the daily article. Wall Street mixed after GDP data. Focus on Fed verdict and tech results. Wall Street traded within a tight range on Wednesday as investors assessed second quarter GDP data and braced for upcoming Federal Reserve policy decision and earnings from major technology behemoths. U.S. economic growth rebounded in the second quarter, beating expectations, but the reality remains grim as most of the boost came from waning imports while domestic demand rose only marginally. It's not really the most positive number because the consumption was pretty weak. From my view, not a hugely encouraging GDP report, said David Russell, a global head of the market strategy at TradeStation. With the Fed widely expected to hold rate cuts at the end of its meeting, analysts are eager for Chair Powell's comments for any hints on future policy direction, especially as the central bank navigates political pressure and assesses the effects of tariffs on inflation. Traders see about a 60% chance of a September rate cut, according to the CME's Fed Watch tool. That's going to be interesting. I'm curious what the September color on September action is going to be. If you remember, the last employment report we got was 4.1% unemployment rate, down from 4.2%. And initial weekly claims have been low. Continuing claims have been kind of right around 2 million for a while now. Wage growth is still pretty solid, although it's declining a little bit, I think. It's going to be interesting because the core GDP price index just also came in at 2.5%. And tariffs are shaping up to be a bit higher than expected just a month ago, 2 months ago. So, I suspect that they might hold again in September, which would be pretty interesting what happens because, like I said, like this article says, markets are pricing in a 60% probability of a September rate cut. So, the latest ADP report showed private payrolls grew by 104,000 in July, topping forecasts of 75,000 ahead of Friday's all-important non-farm payrolls release. The S&P 500 and the Nasdaq on Tuesday snapped their record run due to disappointing results from Dow Components, United Health, and Merck. Investors are not placing in their bets on results for mega caps to steer Wall Street to new highs. Microsoft and Meta platforms will report their results after the market closes, while Amazon and Apple will report on Thursday. Meanwhile, a burst of upbeat earnings from consumer favorites underscored the resilience of American shoppers. Starbucks posted better than expected third quarter sales, but its shares slipped 0.6% on Wednesday. Hershey gained 2.3% on results that topped forecasts. VF Corp jumped 9%, while Kraft Heinz was largely steady after both companies beat quarterly revenue estimates. Adding to the consumer-driven rally, caution permeated after US President Donald Trump announced a 25% tariff on Indian imports starting August 1, and an additional unspecified penalty over Russian dealings. The president vowed not to extend the deadline for trading partners that failed to secure a deal before August 1. Besson said the opposite, just I think yesterday. So it's going to get extended. He will tackle. Meanwhile, US-China trade talks wrapped up with both sides seeking to extend their tariff truce, leaving the final call in Trump's hands. South Korea was also lobbying to secure a trade deal ahead of Trump's August 1 deadline, as its officials met US Commerce Secretary Howard Lutnick in Washington. Estimates beating second quarter revenue of Teradyne lifted the electronic device testing equipment maker to a new near 5-month high, last up 17%. All right. Now, yesterday we talked about Neo Firefly, but I wasn't able to pull up the article. So let's go back to that for a second. This is a pretty interesting piece of news because this vehicle in China sells for $17,000, half of the price of Model 3. And the claim is that they perform, the fact is that they perform better in safety testing than the Model 3, which is incredible because a common misconception about Chinese vehicles is that they're not safe. But I think this testing kind of says otherwise. Neo Firefly, Envoy L60, and Ato M9 are tied to the highest scores in the latest CIASI evaluation. Firefly has completed production line adjustments, and production will ramp up this week with deliveries set to accelerate. Firefly achieved excellent results in China's crash test as Neo aims to create small cars with high safety standards. Firefly achieved all 4 ratings at G or the higher G plus in the latest China Insurance Automotive Safety Index evaluation results, making it the safest small car in the evaluation. The Neo sub-brand announced today. The model received G rating for crashworthiness and repair economy, and a higher G plus rating for occupant protection, pedestrian protection, and safety assist, according to the results published on the CIASI website. This is also one of the 3 highest scoring vehicles among the latest models in the CISI evaluation. Huawei-backed Ato M9 SUV and Neo's other sub-brand Envoy's L60 SUV also achieved the same highest scores. In contrast, Tesla Model 3 received a lower M rating in crashworthiness and repair economy in the latest evaluation, with G ratings in other 3 categories. Yeah, I mean, I think everyone knows at this point that repairing a Tesla is very expensive. And it seems like wherever in the world, that's true. In CIASI's evaluation, scores range from PMAG to G+, from lowest to highest. Wow, so the M is second lowest, which is what Model 3 received in crashworthiness and repair economy. That seems kind of shocking. Building the safest small cars for global users is the philosophy that Firefly established when defining its product, said Daniel Jin, president of the Neo sub-brand, on Weibo account today. Due to various constraints such as cost and its size, it's very challenging to achieve higher safety standards for small cars, especially since Firefly has a very short front and rear overhang, which means there's little crumple space in the event of a collision, Jin said. The Firefly team achieved high safety through a smart overall vehicle design, powerful hardware capabilities, and high-quality materials, Jin said. Separately, Firefly said in an article published yesterday on its mobile app that the model is equipped with 9 airbags, more than the 8 in the BMW X7 and the 7 in the Mercedes-Benz S-Class. Jin also mentioned today that Firefly has completed production line adjustments and production will ramp up this week with deliveries set to accelerate. And you can see in this graph right here, the maker, the model, and all the ratings. And if you speak Chinese, you can see the headlines here. I'm guessing this is the crashworthiness and repair economy. Let's see where Anyway, you can pause the video and look through it if you so wish. You can see Tesla Model 3 right here, M with the crash rate, crash worthiness and repair economy. All right. Next, Tesla makes massive change to robotaxi ride pricing once again. Tesla Robotaxi is getting another switch up in fair pricing strategy, marking the second time the company has adjusted how much it will charge riders for a lift in one of its driverless vehicles in Austin. This time, the change is much different. Upon the launch of Robotaxi in late June, Tesla was only charging $420 per ride, regardless of the length and time spent in the car. Then it bumped it up to $690, etc. It's just that this is a Tesla ride article, so the wording is a little off. But this was what rides were priced at prior to the latest adjustment, which came with the Robotaxi app update. Now the ride price will depend on length, as Tesla is rolling out what it calls dynamic pricing, stating that shorter rides will cost less and longer rides will cost more. It looks as if hailing a Tesla Robotaxi from one end of the geofence to the other will cost roughly $13.70. The length of the ride is about 11 miles. The same route at about 8:30 this morning with an Uber would cost over $16. This is not comparable. These two, I know Tesla Bulls try to make these comparisons, but the Tesla Robotaxi is still at its extremely early stages. So the pricing isn't really going to reflect the necessary economics to scale it up or have at scale. I think Tesla's keeping them a little lower than usual, what they will do in the future for marketing purposes. It's basically a marketing cost to increase adoption. So I think Uber pricing and Tesla Robotaxi pricing and Waymo pricing will be very competitive for years to come. It was only a matter of time before Tesla launched this dynamic pricing model for Robotaxi, as it aims to expand to California in the coming weeks, and it also will broaden the Austin geofence within the next week. Yeah. So I estimated, I think last week I tweeted out that I believe Tesla Robotaxi program is losing about $100 million a quarter. And so this dynamic pricing, which, increases price for longer trips, I think, I'm not sure how much it changes it, because the average price, we'll see how much the average price changes. But I think Tesla will have, until wide adoption happens and you take the human safety monitors and the remote operators out of the loop. So we're talking years down the line. I think until nationwide adoption happens, Tesla will have to keep prices pretty high, or they will lose hundreds of millions of dollars, if not billions of dollars, trying to ramp this thing up. So we'll see. All right, let's move on to EPA unveils plan to scrap U.S. authority to regulate greenhouse gases. The Trump administration is formally proposing to scrap the U.S. government's authority to regulate greenhouse gases as an air pollutant, a move that sets the stage to severely weaken Washington's ability to fight climate change. The EPA on Tuesday unveiled a proposal to abolish the landmark determination that planet-warming gases endanger public health and welfare. If finalized, the measure would lay the foundation to unwind a host of regulations limiting emissions from power plants, oil wells, and automobiles. So I guess this is what part of what Trump administration means by regulatory kind of rollbacks. Yeah. Okay. Any questions, comments? You can leave it in the chat. Exclusive. Tesla signs $4.3 billion of LGES battery deal, source says, reducing China reliance. South Korea's LG Energy Solution has signed a $4.3 billion deal to supply Tesla with energy storage system batteries, said a person familiar with the matter, as the U.S. company looks to reduce reliance on Chinese imports due to tariffs. The LFP batteries will be supplied from LGES, a U.S. factory in Michigan. So my guess is that this is going to be either higher cost per kilowatt hour, or lower capability, lower quality, lower life, or something. Because without tariffs, Tesla chose to go with the Chinese manufacturers, right? But because the cost of Chinese manufacturers has increased now with tariffs, Tesla is going to the second best option. But it's still a step back from the status quo. LGES announced earlier on Wednesday that it had signed a $4.3 billion contract to supply LFP batteries over 3 years globally, without identifying the customer or saying, of course, Tesla. South Korean company said last week it would try to offset sluggish EV demand by increasing sales of storage batteries. thanks to a global surge in demand for power driven by data centers to train AI. In accordance with the agreement, we're unable to disclose customer blah, blah, blah. Tesla's CFO said in April that US tariffs had an outsized impact on its energy businesses since it sources LFP batteries from China. We will also be working on securing additional supply chain from non-China based suppliers, but it will take time, he said. Yeah, I would expect this to happen over a year or two. It's going to take some time to ramp this battery production in the US. In the meantime, Tesla will have to pay higher tariffs when importing from China. And in Q2 results, Tesla Energy profit margins increased because Tesla had imported those batteries in previous months. So in Q3 and Q4, we'll start seeing the impact of tariffs on Tesla's profit margins. Tesla this week also announced a $16.5 billion deal to buy chips from Samsung Electronics factory in Texas as South Korean companies expand their US presence to meet local demand. 3 South Korean cabinet-level officials met U.S. Commerce Secretary Howard Lutnick in Washington in a push to close the trade deal ahead of the August 1 deadline for 25% tariffs on U.S. imports from South Korea to kick in. LG is one of the few U.S. producers of LFP batteries in a battery chemistry long dominated by Chinese rivals that have little presence in the U.S. market. It started production of LFP batteries at its Michigan factory in May. The company said it was considering converting some EV battery production lines in the US to cater to energy storage systems in response to slowing EV demand. Yikes. LG said the contract would last from August 2027 to July 2030 and included an option. So there you go. So it starts 2027 and we're basically August 2025. So 2 years, which is what I said earlier. And included an option to extend the deal period by up to 7 years and to increase supply volumes depending on discussions with its customer. Other players, including South Korean firms like Samsung SDI and SK On, have yet to enter the US LFP market, allowing LG to enjoy a first mover advantage, said Cho Hoon Ryo, a senior analyst at Samsung Securities. Tesla energy storage and generation business accounts for about 10% of the revenue. Okay, and then some Elon Musk quotes that we don't really need to read. Tesla Model X and S are dead in Europe, which is crazy because these cars are pretty amazing in my opinion. But Tesla Model S and X, once the highest standard in the electric car industry, are now little more than a footnote in the company's story. That's because Tesla just killed the 2 EVs in Europe. The American automaker updated its European web pages, removing the ability to order new vehicles, instead leaving just the option to buy a Model S or X from inventory. The move comes after Tesla stopped manufacturing right-hand drive versions of the 2 EVs in 2023. Earlier this year, Elon Musk-led company discontinued the Model S and X in China, leaving Europe and North America as the biggest markets for the 2 models. Now, with Europe out of the picture, the US and Canada are the only major markets where the aging battery-powered cars are still available. Canada doesn't really sell much, so it's basically the US. Earlier this year, Tesla updated the Model S and X with multicolor ambient lighting and a few other minor tweaks. Meanwhile, the prices went up, and brand enthusiasts were not happy. This was an Inside EVs article. Yeah, I mean, this is a great car. Model S Plaid is a great car. If you haven't been in it, if you haven't been behind the steering wheel, highly recommend it just to give it a try. But, I guess people don't really see much of a difference between Model 3 performance and this, I guess, but it is what it is. Tesla's German webpage directs users to the inventory page for the Model S. The problem is that there are no Model S EVs in inventory in Germany. As with any vehicle refresh, it's meant to entice potential customers with new features so that sales figures go up. But it's hard to imagine how that will happen now that Tesla's abandoned Europe and, by the looks of it, the Model S and X altogether. Without any meaningful updates to the pair of flagship EVs, Tesla has effectively given up on its original showstoppers. Customers know it too, as the 2-car sales figures went from headline makers to footnotes. For the past few years, Model S and X have been bundled together with the Cybertruck and Semi on other models category in the company's production delivery reports. In the first half of the year, Tesla delivered just 23,000 other models, while Model 3 and Model Y had nearly 700,000 deliveries globally. By the looks of it, the Model S and X are nearing the end of the road, and it's probably just a matter of time until Tesla pulls the plug altogether. With the recent launch of the 3-row Model Y in China, the much more expensive Model X is hard to explain to a typical car buyer, while the equally expensive Model S is sadly little more than a niche product nowadays. Mercedes temporarily halts EV orders in US. Mercedes builds the EQS SUV, will continue to build them for export. Production of the EVs for the US will stop September 1. Good looking vehicle, but didn't achieve much. All right, let's move on to a couple of macro articles. Housing contract activity slumped again in June as buyers remain priced out. Pending home sales dropped by more than expected in June. Home contract signings slumped more than expected in June, latest sign that the housing market is still essentially frozen. The pending home sales index slumped 0.8% from May and 2.8% from a year earlier to a reading of 72. A level of 100 is equal to contract activity in 2001. Economists had expected a small month-over-month gain and a smaller annual decline. Contract signings fell in all regions of the country on a monthly and annual basis, except the Northeast, where they were flat from 2024 and up 2.1% from May. Mortgage rates near 7%, coupled with high prices, have dampened the traditional spring home buying season. Homes typically go under contract a month or two before they're sold, meaning June's contract activity reflects the end of the typical busiest time of the year for sales. The spring and summer for sale inventory has surged, but it hasn't been enough to convince buyers to come off the sidelines with home prices at record highs. Not all homes that go under contract end up converting sales. Contract cancellations have been on the rise in recent months as buyers and sellers remain far apart on price and repair expectations. Yeah, I think the prices will probably have to come down for this market to pick up, or mortgage rates will have to come down pretty substantially. I think we kind of covered this quite a bit. All right. On that note, thank you very much, everybody. In about half hour, we have the Fed decision. I might go online. I'm not sure for the Fed meeting. I guess it'll be a game time decision. If not, I'll chat with you all tomorrow. Take care.